Hey guys, welcome back to the channel. In the previous video, we discussed the MACD indicator in detail and I hope everything is crystal clear. And if it's not, I strongly recommend you to watch that video first and then continue with this video. Anyways, in today's video, we'll discuss 3 MACD strategies which are comparatively less known to most traders, but these techniques prove to be extremely profitable if it is used in the right sense. Let's get going with this strategy straight away, and don't forget to like, share, subscribe and comment if you find these videos useful. In the first strategy, we will use the MACD histogram and identify a momentum reversal. Most of the traders like to chase breakouts and most of them have a fairly bullish view on the market. So we take more breakout trades than reversals. But this particular strategy is more of a price reversal strategy from an area of value. I have talked about the area of value concept in almost all my videos. But to freshen up your memory a bit, an area of value is an area or a zone where the price action is expected, which may be a breakout, a reversal or a pullback. The typical areas of values are supports, resistances, dynamic zones, trend lines, etc. For this strategy, we will require the MACD histogram, which is apparently a measure of the momentum in the security or the stock. Now here's how this reversal strategy works. If you have already missed the train or if you have already missed a move, then you might have to wait for the price to come back to the market structure or an area of value like a support resistance or a trend line. Then you might have to look for MACD histogram showing strong momentum. That is, you want to look for peaks and troughs in the histogram. Once it reaches the support or resistance level or the area of value, we will have to wait for a price rejection from these particular levels. We have to confirm our trade in the opposite direction using price action candles like pin bars or engulfing candles before actually taking the trade. Moving on to strategy number 2. I have talked in bits and pieces about this second strategy in my previous video on MACD indicator. This strategy works by making use of different time frames for our trades. First of all, we will use the MACD indicator on a higher time frame to identify the market trend or the market direction and then take a trade in the direction of it using a smaller time frame. Here's how it works. First of all, you have to define your higher time frame. So let's say if you are an intraday trader, let's say your entry time frame is 5 minutes, then your higher time frame can be 50 minutes or 30 minutes. Likewise, if your entry time frame is 1 hour, then your higher time frame can be 1 day time frame. So in case if you are a swing trader or a positional trader, entry time frame may be a daily time frame. Then the higher time frame would be a weekly. So you understand the logic here, right? If the higher time frame MACD line crosses above the signal line, then look for long trades by utilizing an entry at the smaller time frame. Similarly, if the higher time frame MACD line crosses below the signal line, it has a bearish outlook. Look for short setups at your lower time frame. The final strategy we'll be talking about is MACD histogram squeeze strategy. Whenever there is low volatility in the market, usually large explosive breakouts can occur. I have talked about the concept of volatility in my Bollinger Bands video, so if you want to know more, please check out that video. So as a general rule of thumb, when the volatility reduces, you'll notice that the range of the candle gets smaller and tighter. So once again, we will have to take the help of the MACD histogram. Here's how you should approach this trade. Look for the price to come into a key market structure or an area of value like a support line or a resistance line or even a trend line. The MACD histogram looks almost flat without any visible peak or trough, which means that the histogram bars are of smaller size, which in turn means that there is a lack of momentum in the prices. You can enter a trade in either direction when there is a breakout, which means that the price breaks the market structure or the area of value. This is one of the favorite strategies that I use because it can give you really high profitable trades. Because the longer the MACD histogram remains flat, the likelihood that the breakout is stronger or the breakout is explosive in nature.